Welcome back, traders. Ready to learn a winning strategy that's perfect for scalping? Today I will show you an easy way to trade with the trend. We will use a mix of indicators, simple rules, and a tested scalping strategy that really works. It's not just effective, it works for all kinds of markets and time frames. Let's dive in and discover the secrets of successful scalping together. Many traders make the mistake of trying to buy at the very bottom of a downtrend, hoping to catch the exact moment of reversal. While it would be great to make a big profit from that, it's extremely rare to pinpoint that exact moment. Most of the time, it's just not realistic. You might have heard the saying, the trend is your friend. What that means is I will only make trades if the chart is going up. So let's jump into the first rule of this strategy. The most important thing about this strategy is that we will only trade in the direction of the trend. You might wonder, how do we know if it's an uptrend or downtrend? It's easy. Just go to the TradingView, click on the Indicators tab, and type in EMA for exponential moving average. Set the length to 200, which gives us a 200 candle moving average, relevant to your time frame. I will change the line thickness for clarity.
Subscribe.
But that's optional. With this strategy, we will only enter a trade if the chart shows an uptrend. That means the price must be above the 200 EMA line. If it's below, we won't trade. So rule number 1, trade with the trend. Now let's move on to the other rules we need to follow. Now for rule number 2, we are going to use the RSI indicator, but with a twist. Go to the Indicators tab and search for RSI divergence. Make sure to select the right one. Next, go to the middle line tab and change the color to white, making it a solid line for clarity. Typically, the RSI indicator tells us if the market is overbought or oversold. But in our strategy, we will use it to spot momentum.
Subscribe.
Rule number 2 states that we will only enter a trade if the RSI line is above the middle white line. If it's below, we won't trade even if other conditions are met. What's the good thing about this RSI indicator is that it also shows divergence. Divergence happens when the price moves in the opposite direction of the indicator. For example, if you see higher highs on the chart but lower highs on the RSI, that's divergence. While it's not a strict rule, spotting bullish divergence is a positive sign when all other conditions align. Now let's talk about rule number 3, focusing on momentum candles. These candles show the strength and velocity of the price movements, often signaling the start of a trend. Specifically, we are interested in what's called an engulfing candle. An engulfing candle simply means a candle that completely covers the previous one. For instance, if a bullish candle's body engulfs the previous bearish one and it closes above the previous candle's open, that's an engulfing candle, indicating a potential trend start. Instead of manually searching for these candles, we will use an indicator to do the work for us. So go to the Indicators tab and search for engulfing candle. Select the appropriate one and you will see green arrows on the chart. Since we are focusing on long trades, we will ignore the red arrows. So rule number 3 states that
Subscribe.
we will only enter a trade when we see a green arrow, signaling a bullish engulfing candle. Let's recap what a successful trade would look like. First, we check the price is above the 200 EMA line, indicating an uptrend. Then we ensure that the RSI line is above the 50 mark, confirming momentum. While a bullish divergence isn't necessary, spotting one would strengthen the trade further. Finally, we look for a green arrow. It's important to note that we only enter a trade when all these conditions align. After the green arrow candle closes, remember to enter the trade. It's crucial to wait until the candle completes its formation because sometimes it may initially show a green arrow but change before closing. falling to become an engulfing candle. So only enter the trade after the candle has fully closed with a green arrow. For this strategy, we will set our stop loss at double the entry length and our take profit at a 2 to 1 ratio. It's straightforward. Once set, we will wait for the price to hit our target, and there you go. It's worth mentioning that you won't be trading every day with this strategy, since we only trade with the trend. There will be times when the market isn't trending and in a consolidated state, and you won't find suitable trading opportunities. That's perfectly normal. Just remember, we will only trade when the market is in your favor, not against you. Let's walk through another example. First, we check if the price is above the 200 EMA line. Then we ensure that RSI is above the 50 mark.
Subscribe.
If both conditions are met, we look for a candle with a green arrow, indicating a bullish engulfing candle. After waiting for that candle to close, we enter the trade. We set our stop loss at double the length of the engulfing candle and our take profit at a 2 to 1 ratio. Then we will wait. If the price moves up and hit our take profit mark, we exit the trade. So traders, we have just explored a powerful trading strategy that works great because it follows the trend. Can you do me a favor? Just take 2 seconds to subscribe and like this video. It means a lot and really helps us out. And if you want to learn more about smart money concepts, order blocks, and other trading strategies, check out the next videos. Thanks for watching. See you next time.